What I think gold and silver are doing now, they're revealing the true state of the dollar. And by dollar, I mean the fiat currency, because technically, really, the dollar used to be a weight of silver and gold, right? And a lot of people don't know that, and that's the whole problem. I saw a hedge fund manager, Ken Griffin, well, one of the biggest hedge funds in the world. He said recently, it's really worrying that gold is going up, really worrying for the dollar. And I thought he must not understand what gold is and what the dollar is, because the dollar is not real money.
Some asset prices are hitting the roof. Gold has had more highs than a 1970s rock star this year, hitting $4,000 an ounce for the first time on Wednesday. It has surged by 50% during 2025. The gold rally reflects unease about the economy and lingering concerns about inflation, which has been stuck above the Federal Reserve's 2% target for the past 4.5 years. The United States has hiked tariffs to the highest level since the Great Depression, and Japan's incoming prime minister has endorsed lower interest rates and higher borrowing. Renowned global investor Mario Innecco recalls how a 2004 Financial Times editorial titled "Going Gold" dismissed bullion as obsolete. Within decades later, gold is near $4,030. Innecco says the paper's prediction aged poorly. He argues that financial elites downplayed gold to keep the public tied to fiat systems. Regarding the rapid rise of gold and silver, Innecco links it to years of central bank intervention, particularly through money printing. He notes that since 2008, central banks worldwide have injected an estimated $25 to $30 trillion into the system, steadily debasing currencies. The M2 measure of the money supply reached an all-time high as of late August, according to the latest update in the St. Louis Fed's Fred Monetary Database. Not only is this fueling the bull move in gold and silver, to the extent that a commensurate amount of wealth is not produced that would back the increase in the Fed's money printing, expect to pay more for goods and services in the coming months. Concurrently, Innecco notes that those who once championed the dollar's dominance, the deflationists and milkshake theory believers, are now being proven wrong. Before we dive into Mario Innecco's sharp insights from his latest interview, make sure to hit that subscribe button and tap the bell icon so you never miss a moment when truth meets the market. Let's get into it.
It's a very significant day, at least for me. And why is that? Well, because a couple of years later, in 2004, when I was already a staunch sound money proponent, or a gold bug, if you want to call it. I don't mind being called a gold bug. I was going to work, and I used to work in the city of London as a futures and options broker in the government bond market, not in gold and silver, even though we did trade a few gold and silver futures for some clients. But anyway, I was on the platform around 6 a.m. in the morning, waiting for my train. And I used to buy the FT, and I used to turn to the editorial page. I don't know why, I just like turning to the editorial page first thing and read what they were covering. And this came up, and this was April 16th, 2004. You can see here that I wrote the date. And it says, going gold. The pointlessness of holding bullion continues to sink in. I'm not going to go through this. I'm going to put a copy here, and you can pause the video and read it yourself. But the gist of it was that the FT was saying gold is finished. The central banks have our backs. Inflation has been tamed. Yes, at the end they say, whatever the speed, the direction is clear. Gold is on its way out as an investment and a reserve asset. 3 cheers for that. I read that before I got on the train. And at first I was like kind of outraged and a bit angry. But then I I realized this is rubbish. They haven't done their homework. And I even thought this is like fake. So it was my first experience with fake news. So what I did when I got to work, and at the time I used to work for Men Financial, which later on became MF Global. They did an IPO. I went to the mail room. I had cut the editorial off the paper, and I had it laminated so that I would always have this here. Of course, I can probably get an old copy of it, but I have this, and I wrote here the date, excuse me, and the price of gold, and it was $400 and 65 cents. And as I speak here, Wednesday, October 8th, 2025, so about 21 and a half years later, we are at $4,030, so 10 times higher. So how come the EFT got it so wrong? Well, because the EFT is an arm of the banking establishment, financial oligarchy establishment, and one thing they hate is the public to not be in their fiat currency system, in their debt-based system. They want you in there. They don't want you protecting your wealth, and that's why they do it. What we have now really is going dollar. The pointlessness of holding dollar continues to sink in. That's what it's all about now. And why do I think gold and silver, for that matter, are now accelerating so much quicker, so much higher? Well, I told you about the Bernanke speech. I warned colleagues, family members, friends. Most of them didn't really want to listen to me or didn't take precautions. Some of them did. I had some very two or three, friends that I can count on one hand at work, colleagues that, yeah, they saw this as well, and they became gold bugs, and I still talk to a few of them. They're really good friends. But even people who thought differently, who knew that QE was a disaster, because QE is basically money printing, and I did a little bit of research. So the major central banks of the world, from 08 until now, until the peak really, they printed 25 to 30 trillion dollars out of thin air. Yes, and the Fed did about a third of that. They went from 800 billion, their balance sheet, to almost 9 trillion, excuse me. Japan's still at it. And who knows, maybe the Fed will start printing again. I always used to get a lot of pushback from the deflationists, those who thought the dollar was going to end up being king, the milkshake crowd, or the people who said, yes, actually, I remember one person, and I'm not going to use names, saying QE is deflationary, right? My goodness. And so what I think gold and silver are doing now, they're revealing the true state of the dollar. And by dollar, I mean the fiat currency, because technically, really, the dollar used to be a weight of silver and gold, right? And a lot of people don't know that, and that's the whole problem. I saw a hedge fund manager, Ken Griffin, one of the biggest hedge funds in the world. He said recently, it's really worrying that gold is going up, really worrying for the dollar. And I thought he must not understand what gold is and what the dollar is, because the dollar is not real money. The dollar is just the fiat currency. Dollar is just a derivative of gold. He didn't go as far back as 1933 when money was basically made illegal in the US. You couldn't hold money anymore, i.e. gold. You could silver, but not gold. And that's what a lot of people forget about.
Mario Innecco warns that we're in a critical phase where gold exposes the illusion of wealth built on debt and money printing. According to Innecco, this everything bubble was fueled by the $25 to $30 trillion printed by central banks since 2008, creating unrealistic expectations of wealth. As fiat currencies depreciate, he warns, citizens bear the cost through higher living expenses and declining purchasing power, while governments effectively transfer their mismanagement onto the public through devaluation. In 2026, confidence in the euro, the dollar, or the yen is no longer what it once was. Between shaky monetary policies and government debt, doubt is setting in among savers. The US dollar has weakened over much of the year in a sign of possible threats to its global standing. Meanwhile, gold is having its day in the sun, rising above $4,000 an ounce for the first time on Tuesday, and poised for what some analysts think will be levels near $5,000 by the end of 2026. Citing economist Martin Armstrong, Innecco adds that currency depreciation acts as a free market tax, silently stripping away overstated wealth. The global surge in gold represents not just a market rally, but a revaluation of real wealth amid the synchronized devaluation of fiat currencies worldwide. Let's jump into the interview.
I think we're deep in that catastrophic moment for the system. The primary reason to own gold is that it maintains value, especially during times of political, economic, and currency-related crises or crisis. In short, it operates as insurance that includes, but is not limited to, insurance against political uncertainty and economic disorder, as well as insurance against the whims of central banks and their tendency towards money printing. So now let's go to the section where I think we find the reason why we're seeing what we're seeing now. And it's on page 70. And it says, gold is a revealer of falsely stated wealth. Remember that 25 to 30 trillion dollars of QE I mentioned to you? Well, that's falsely stated wealth that has also spewed over, if you want to call it, into the biggest financial bubble the world has ever seen, right? And we're still, the everything bubble is still there. I mean, the NASDAQ is at all-time highs, but so it's a massive bubble. It's not just that 30 trillion. You have to multiply that 30 trillion many times over because this system uses a lot of leverage. So when wealth is overstated and expectations for future wealth are unrealistic, fiat currencies depreciate. The depreciation is borne by the citizenry, who are forced to lower their living standards to compensate for both personal economic mismanagement as well as the mismanagement of the affairs of state. Financial and military overextension has a social corollary in overpromised Social Security, Medicare, overstated real estate equities, affluence. As expense runs out of control, guarantees to the citizenry also explode as politicians seek to retain the privilege of office. But the promises of wealth are false. The belief that ownership of real estate is a ticket to fortunes is hollowed out for what it is, a myth. I would add here that you can own real estate, farmland, without leverage. And I think that does maintain some of your wealth, even though it's not that liquid in a crisis. But anyway, let's continue. Wealth that was taken for granted suddenly appears ephemeral. The amount of currency which once bought certain things no longer does. But wages have not risen along with prices. Instead of wealth, citizens get saddled with a big chunk of government debt, i.e., debt created by mismanagement. The result is everyone pays more for food, fuel, and other necessities. Government passes on the mismanagement of economic affairs to its citizens by devaluation. Well, that's what's happening right now in spades. Gold is telling us that, and silver. And many people, unfortunately, especially the middle class, are going to be left penniless. Yes, they'll have balances in their bank accounts, in their savings accounts, in their holding of government bonds, in their state pensions, but it will buy nothing. And that's why you really do need some gold and silver to protect you financially. And it's still not that late to do it, in my opinion. As the imprisoned money manager Martin Armstrong has artfully stated, well, he's out of prison now, of course, and I quote Martin Armstrong, "The decline in the value of a currency is in reality a free market tax, taking away wealth that is overstated. So currency can also be an indirect tax to compensate for the poor management of the state," close quote. The corresponding rise in gold, especially when it is a global phenomenon, and it is now, of course, in effect, a devaluation of all the world's currencies and the restatement of wealth on a global scale. As is both presently and historically evident, the attempt to restate wealth to a lower level becomes a competitive event in its own right, as nations fight to devalue their currencies against each other to reduce the burden of indebtedness. It should be recalled that when FDR lowered the value of the dollar vis-a-vis gold in 1933, America was the 9th nation to do so in a 3-year period. So yeah, I'm not trying to have a go just at the dollar here, the fiat dollar, all fiat currencies, which, by the way, are derivatives of the dollar. They're all going down. They're all going down in the ship together.
Gold has experienced significant gains in 2025, surpassing unreachable levels recently. This strong performance is reportedly linked to global instability and worries about inflation, driving investors to gold as a safe haven. Upcoming economic data and Federal Reserve announcements, including speeches by Jerome Powell, could influence short-term price movements. Could gold's current surge mark the dawn of a new monetary era where tangible assets once again define real wealth? Drop your thoughts in the comments section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.